My name is Amanda Fabiano. I'm the COO of KindlyMD, DBA Nakamoto. And today we have a group of Treasury companies today to talk about all the different things going on in the industry. So Treasury companies have been this new boom, right? Especially this year. And they're popping up all over the world. And so what's fascinating is we have people from Amsterdam, England, and Norway today to talk about what they're doing in their regions. So today we'll dig into why you guys chose the location you chose, what your long-term vision is, and how we might see things evolving globally. So let's start with geography. What made you choose your specific location? Was it regulatory clarity, tax policy, access to Bitcoin, proximity to capital, culture, and has that location proven to be a good location?
Yeah, happy to start. I think we chose Amsterdam specifically because it has always been on the forefront of financial innovation. So if you go back to the 1600s, it has basically launched the first stock exchange globally, which is an amazing feature. And then I think if you look past the 2000s, when we moved to electronic trading, we really built massive powerhouses from a trading point of view. Optiver, IMC, flow traders. And then if you move fast forward 10 years after, you see crypto exchanges like NordBit, which has been founded in the Netherlands. You see Bitfavo, which is founded in the Netherlands. So we really have a thriving community when it comes to trading, but also in terms of digital assets. So we're really excited to basically become part of that broader ecosystem. And also, being able to host everyone here in this amazing venue.
It is an amazing venue. Norway.
So actually it's Sweden. So we do love Norway.
You didn't read my prep notes.
It's a good friend of ours, but we are based in Sweden, in Stockholm. Sweden's great, really. It's a very mature capital market. The country's small, only 10 million people, but we punch well above our weight when it comes to capital, entrepreneurial spirit, and tech, and of course, love of Bitcoin. Sweden was actually the first country in the world to get a Bitcoin ETP. So we've had people investing in the capital markets in Sweden in Bitcoin since 2015. Sweden also saw the first court case that set the entire precedent for the EU for VATs regarding crypto transactions. So Sweden's always been at the forefront of crypto, has a very liquid market. Our exchange is actually operated by NASDAQ, so not a lot of people know this, but you have NASDAQ US, and then you have NASDAQ Sweden, $2 trillion market. And of course, our tax rules are really good, but especially compared to buying Bitcoin on spot. If you buy Bitcoin on spot, you're paying 30% capital gains tax, there you go. And if you're buying a stock through an ISK, you're only paying 1% on your portfolio. So there's a huge advantage to actually buying a Bitcoin treasury company versus just buying Bitcoin on spot.
Henry?
Yeah, so before becoming CEO of Satsuma, I was at UTXO. And at UTXO, we were, diving into each of these markets as we were investing into treasury companies all over the world. And I was spearheading our investments into London. And as we dug deeper and deeper into the London capital market, we were kind of amazed at how strong and how well suited the capital markets there are for a Bitcoin treasury strategy. In particular, London, if you look past the sort of headlines of, IPOs are fleeing and some de-equitization, London remains the capital of venture investment in Europe. It has a market that is incredibly well suited for secondary issuances, which are the lifeblood of Bitcoin treasury companies. And it has the third largest corporate fixed income markets in the world after the United States and China. So the ingredients are all there for a world-class Bitcoin treasury company to be built. And unlike, America, which has strategy, or Asia, which has Metaplanet, there isn't really a, running away market leader in Europe. All of the Bitcoin treasury companies here are effectively of similar sizes, and each one of them is innovating in a different way to compete in that market. So it's a very, very interesting place to be.
Do you think that you'll stay anchored to the locations that you're at now, or do you see yourself evolving into different markets as well?
You mean into different jurisdictions?
Like dual listings or anything like that?
I think dual listings can be very interesting, but mainly from a point to attract other investors in other countries. So you have seen quite some treasury countries basically dual listing on, say, the OTC markets in the US. That can be an interesting move, but you really need to think that through and also ensure that you have sufficient liquidity on those markets. before you really tap into those markets. Like it really makes sense if you have institutional grade liquidity on all those exchanges on which you're going to do a list.
Yeah, for us, our goal is increasing institutional and retail Bitcoin adoption in the Nordics. So we do want to focus on the Nordic investors, institutional and retail. I'd say over time, there's definitely options for going to the US markets. There's options for going for the Frankfurt market. But I think what's key here for every treasury company is do focus on your local market and then expand when you have something that's actually competing versus the local companies, right?
Bullish. I like it.
Yeah, I agree with that. I mean, you want to focus on your local market. I also think that there are strengths that come from the regulator that you're dealing with, right? So, like the FCA, for example, they're a pretty strict regulator. You have to tread carefully with them. They are conservative. There's a sort of a learning curve there, but working with a regulator like that in a way can be helpful in the long term because it pushes the companies and the competition to be better and to work harder. And you come out the other side of that as a more institutional company with a more solid footing and basis.
So geography obviously has a lot to do with why people choose certain strategies, but what is a Bitcoin treasury company? Let's talk about like fundamentally what that is and how you guys are thinking about your strategies.
I think if you compare us with Apple, Apple's basically holding mainly fiat or short-term money market funds or treasuries in their own treasury, basically to run their financing. We chose a different path. We chose Bitcoin because we believe that's a much more valuable asset, really moving towards like the currency debasement as well. And we think like longer term, it's the most valuable asset to hold on your balance sheet. So if we look at what a treasury company can become, it can actually become anything it can almost wants to be. So it can be a bank to really like build a whole financing business. It can also start building out a conglomerate of profitable businesses. So really using the Bitcoin on its balance sheet to purchase more profitable businesses, use the profits out of these businesses to accumulate more and more Bitcoin. That can also be a really interesting angle.
Yeah, I think the term is definitely evolving right now and is going to keep evolving. I think when you're talking about a treasury company today, you're talking about the MicroStrategy model, the Metaplanet model. It's a hyperscaler. It's a company focused on getting as much Bitcoin as possible, as fast as possible, as cheaply as possible. But I think that's going to evolve over time. I think to me, what a treasury company is, a Bitcoin treasury company is, it's a company that's long-term focus is on growing your wealth in Bitcoin and growing the amount of Bitcoin you have on the balance sheet. And then the question is, what do you do with that? Do you just focus on getting more Bitcoin, which is what a lot of companies are doing? But I think we're going to start seeing other things where, how do I use my Bitcoin to actually grow my business, whatever that business is? So that's the answer for me, is it's a company that's focused on buying more Bitcoin over time.
Yeah, I think that we will see the concept of a Bitcoin treasury company, right? Which is essentially a company that reorients their entire focus around Bitcoin, right? Which is different from a operating business that does something that's not Bitcoin focused and simply decides to hold some of their treasury in Bitcoin, which will eventually be probably every company in the world, right? But right now you have this unique phenomenon of Bitcoin treasury companies, which reorient everything in terms of Bitcoin. And those companies, I think, will evolve into Bitcoin businesses, building businesses on top of their Bitcoin balance sheets. And I think that'll happen for two reasons. One is that Michael Saylor, sort of preaches that the ideal use of capital in a Bitcoin treasury company is simply to buy Bitcoin. I don't think that that works for companies of our size that are trying to scale and survive to become the next strategy. The capital markets will be open to strategy far longer and in much worse circumstances than they will be open to us. So we have to build businesses, operating businesses with cash flow on top of those balance sheets for longevity, for resiliency, so that we can survive these cycles and grow into the size of a strategy. That's number one. Number two is that we are in a relatively permissive regulatory environment for crypto assets. And in the future, I think that may change, particularly in the United States, if the White House switches hands in 3 years, I think the easiest vector of attack for regulators on a Bitcoin treasury company is you're a fund and you should register as a fund, and you therefore lose the ability to issue accretive debt or equity capital. And the defense against that is to have a robust operating business.
Yeah, totally makes sense. It's been, the topic has been raise money, buy Bitcoin, but that's not like a long, like just holding Bitcoin is not like a long-term, like you need more capital to come in to be able to sustain the business, right? So I totally agree with all of you.
I also think on that, Amanda, yeah, you really need to differentiate yourself. If you look at globally, there are over 100 different treasury companies already. So how are you going to differentiate yourself? And to Henry's point, you really need to look at operating businesses. That's a key differentiating factor, but also how you structure your balance sheet and how you most efficiently make use of your balance sheet.
So do we think that there will be a few large treasury companies in the future? Do you think we'll see consolidation, or will we continue to see a lot of treasury companies in different markets?
We already witnessed the first consolidation within the treasury companies. So in a way, that's already the first move. From our perspective, we see it as a positive that if, say, a treasury company is trading significantly below the MNAV, they are unable to basically go above one, that another treasury company within the industry is effectively consolidating that treasury company, specifically because then we ensure that that Bitcoin stays committed to the same goals and principles to which we started those treasury companies in the first place. I think globally you would have like some serious large players. You already have MetaPlanet, of course, in Japan, Strategy in the US. Now we see in Europe, we see like multiple popping up in each country. Time will tell how that consolidation will play out, but it's definitely going to happen.
Yeah, I mean, I agree. I think essentially we're going to see a lot of consolidation and then diversification. And then where we are right now is we're seeing at least one Bitcoin treasury company, if not multiple, in every major market. I think we're going to start seeing that. I think we're going to see new business models, new ways to accrue yield, new ways to grow the business, seeing more operating companies built on their Bitcoin stacks. And what's going to happen is the winners are going to keep moving upwards and the losers are going to disappear or hopefully get acquired by other treasury companies. The goal here is to get every company in the world to have some Bitcoin on the balance sheet. And I think there's going to be a lot of ups and downs on the way to that.
Yeah, I think the interesting thing about our industry is that the cycles are fast. And so you very quickly get a sense of who's dedicated to Bitcoin, right? I think everybody here has been in this space for many years, maybe a decade, plus. And so, you've seen through the years, people who have been like, oh, I'm going to do this, right? I'm going to make a bunch of money really quickly. And then it gets really hard because the price crashes, you deal with volatility you've never experienced before in your life. And a lot of those people are like, yeah, I'm out, I'm done.
That's the fun part.
Yeah, that's what I completely agree.
So we talked a lot about structure, geography, and I think you all know what I'm going to ask you next because I've been asking you questions behind the scenes on it. So I think about how we measure treasury companies. I do not like MNAV and I do not like sats per share for measurement of treasury companies. I think that they are stale metrics that don't really give the underlying understanding and assumption of the business. How are you guys thinking about measurements and how you're sharing your measurements and what you think the industry should be judging a treasury company on?
I think if you look at treasury companies now, they currently share their measurements. You can nearly track them all live on their own websites. There are also websites which are basically consolidating it and updating it near real time. But what you see is that quite often those MNAVs are incorrect because of the data sources they're using. The amount of shares are not correct. The amount of Bitcoin, which might not be correct, or pricing is simply incorrect, which is there. So I think collectively as an industry, we need to tackle that issue as a whole because treasury companies basically get targeted because of their MNAV basically being too high, too low, or like not moving at all. So I think we need to work on that collectively. Also show that there's assurance on whatever we are publishing and make sure that it's factually correct.
There's an inherent conflict between being a public company and being able to be extremely transparent, right? Because you can't always say what you're doing. That's just how it works as a public company. So that's why I think some of these metrics don't exactly make sense. So for example, MNAV, your outstanding shares, you don't update that every day somewhere. And the third-party data sources are sometimes very wrong. And so people are pulling these numbers from like sources that they think are good, but the company can't even respond to that or get like the updated information to those sources. So I agree. What metrics do you think treasury companies should be judged on?
Well, I think it's more of an iffy one. It's not like a hard metric, which I know is what you want, but I would say it's coming back to the shareholder. It's really something that gets sometimes forgotten in the treasury company narrative. It's what do our shareholders actually want? And for us, how we want to be judged by our shareholders is, are we going to bring more Bitcoin adoption to the Nordics, to institutions, to retail? And are we going to bring more utility and usage towards Bitcoin options and Bitcoin derivatives? That's where we're focused on, is as long as we're showing our shareholders that Bitcoin has a space in the Nordics and that the value and utility of our Bitcoin stack is going to keep increasing over time, then I feel we've done a good job.
Yeah, I mean, MNAV is a particularly interesting one because nobody agrees on how to calculate it, right? I mean, it's like you go to MicroStrategy's website and it's, it's the NAV divided by the enterprise value, right? But a lot of other people use the market cap, not the enterprise value. Some people use just the shares that are in issue. Some people use the shares that are in issue plus the warrants. And warrants are a pretty popular method of financing for Bitcoin treasury companies and obviously represent future dilution. From our perspective, it's always been like, well, you should include the warrants. Like right now you have companies with like 30% warrant, dilution coming down the line, but they're only showing their MNAV based on the shares that are in issue. So they're out there telling people, oh, we're trading under a 1 MNAV, but they're not under a 1 MNAV. They're actually like a 1.2 MNAV, right?
Yeah, we saw the same thing in mining companies. So in 2020, 2021, there was a rise of public mining companies. And the metrics that everyone kind of held everyone to is the cost to mine. It made no sense. Some people were using only electricity costs. Some people were excluding SG&A. Some people were including SG&A. Some people were excluding ASIC costs. Some people were including them. And ASIC cost was such a big part of the overall component. So it was like you can look at someone and they might put in an investor presentation, the cost to mine, it was at the point like maybe like 15 grand, and another person would have it for 60 grand, but they were actually a better cost to mine because they included everything in there. So I think we'll see over time treasury companies start to evolve and hopefully have like metrics that work for everybody. But I've never, like in mining, I never saw everyone get aligned. So I guess I'm a little pessimistic on like the ability for the whole industry to get aligned on metrics and how you calculate them. So we have time for maybe one more question. If we have a crystal ball, which I think we all wish we would have because we would have all saved cash to buy Bitcoin yesterday. Where do you think we'll see the industry, and especially where treasury companies will be in 5 years from now? And 5 years in Bitcoin is a very long time. It's like basically like you're a dinosaur.
So you're talking about when Bitcoin's $1 million?
Treasury companies, yeah.
No, but Bitcoin.
Yeah, I'm not asking for price predictions. I hate that.
But nonetheless. I mean, I think that we will see more companies that are operating companies that have a Bitcoin treasury, right? That maybe the operations have nothing to do with Bitcoin, right? I think that will become considerably more widespread. But I also think that the current class of Bitcoin treasuries, right, companies that are focused specifically on Bitcoin, there will be considerable consolidation. And you'll probably see like a cohort in each geographic area that has come through those 5 years of competition and consolidation and has come through as sort of leaders. I don't think necessarily that, there may be one particular leader. That doesn't mean that there's going to be one Bitcoin treasury per region, right? I mean, I think multiple companies can succeed at different sizes in a single jurisdiction.
I think to add to that, yeah, we also need to be mindful, of course, of the whole centralization. We also don't want like one treasury company globally to be in existence. It has to be way more dispersed. Every jurisdiction, maybe every country deserves a winner in that sense. But I think fast forward in 5 years' time, hopefully Bitcoin price is up 10x. And then we can also see way more companies already adopting this in their normal treasuries for the like of some Max 7 or other companies.
Yeah, no, I totally agree with both points here. I think for me, maybe it's more wishful thinking, but I hope it's a prediction, is that I want to see Europe own a lot more Bitcoin in general. I want to see more European companies owning Bitcoin. I want to see European citizens owning Bitcoin. I want to see European governments owning Bitcoin. And yeah, I mean, US has gotten a really good head start this year. Millions of Bitcoin and treasury companies and an IBIT. China's never stopped accumulating Bitcoin. So I think Europe really needs to catch up. And I hope in 5 years we'll be there.
I
Europe
think
is
to add to that, like if you look, the Minister of Finance was here yesterday of Luxembourg, him basically stating here outright, 1% of his sovereign wealth fund allocated to Bitcoin, never selling it, holding it until eternity. That's the bullish signal we need also from politicians globally overall, but especially in Europe to catch up with the US.
I feel like there is a mentality in Europe that is uniquely well suited to Bitcoin. And it was an eye-opening experience for me because, in the United States, it's like if you live in a house that was built in the 1800s, it's like, oh, wow, that's an old house. That's really cool, right? And it's like in Europe, you're meeting with institutions that have existed for 600 years. So there is inherently a longer-term mindset that exists in Europe that doesn't necessarily exist in the same way in the United States. And so when you sit down with these banking institutions, the Rothschilds of the world, right? And they're like, we have this name and this reputation that extends back centuries. And you're like, well, we actually also think in centuries, right? People don't think about that when it comes to Bitcoin because they think, oh, it's all short term and quick cycles and, make a quick buck. But, the people who have been in this space for 5, 10, 15 years, right? Like they are thinking about the future in decades or centuries. And the companies that are being built on top of this asset can take that kind of a long-term perspective. And so that's, when I was talking about how the increased regulatory environment, the conservatism is actually beneficial, it forces you to return to that perspective, to say this isn't a race or a sprint, this is a marathon, and you're building a company that you want to last for decades or centuries.
Bitcoin certainly will. Thank you guys so much for your time.